Welcome to our discussion on accounting, and we have started discussion in our previous session on accounting equation, and we will have some special issues or typical issues and its impact on the accounting equation. For example, we would like to see depreciation in accounting equation, dividend in accounting equation, and accounting equation and the balance sheet. That is the focus of our discussion. But let me take you back to our transactions and the Excel sheet where we started. If you remember, we saw that a set of transactions, and every transaction affects the accounting equation. So with each and every transaction there was an effect on the accounting equation, and this process of accounting equation preparation is based on the business entity, accrual, matching concept, and the dual aspect concept. Then we slowly went into that some specific expenses. In the previous case there were no expenses. Here, how are the expenses shown? We can see that because of the expenses the profits are reducing and cash is also changing. But here we saw that expenses are paid. Then we saw how outstanding expenses due but not paid are recorded. There's a new item called an outstanding interest, so expenses reduced from the profit. Since expense not paid, it is shown as a liability. We also saw that whether paid or not paid, the profit is same. So profit is determined on the basis of accrual concept. In this session we would like to discuss about depreciation. For example, here we have not considered depreciation on the furniture. So let us see what will happen to the depreciation, but in the process we'll again go back to the transaction. So therefore we started business, so we can move fast there. We started business with this, and that is in the form of cash, so it's not a problem. I've taken a loan, so cash goes up. The new source of cash goes up, and the new source of money comes, and that is the loan. So I show the loan. Then you purchase goods, and the goods is 120,000, and cash reduces to the extent of 120,000. This is all we have done in the past. Now I'm purchasing a plant for 35. No change in the stock, no change in the no, there will be change in the cash because we are purchasing it for cash. No change in the previous case also I should have shown that. No change in the capital and no change in the loan, and here also no change in the capital and no change in the loan. Okay, so then we are selling the goods for 200 for cash, so my cash goes up. My cash goes up by 200, and we are selling the entire stock, so there will be no more stock available. No change in the plant as of now, no change in the capital, no change in the loan, but there is a profit coming up, and the profit is 200,000. 200 minus 120. Okay, then after that we are paying interest, so therefore cash will reduce by 2, but since interest is an expense, so profit will reduce by 2. No change in the loan, no change in the capital, no further change in the stock, still now no change in the plant. In the same way we saw that salary is due but not paid, so the profits will reduce because it's an expense. Profits will reduce by 15, but you have not paid that, so therefore there will be a liability, which we saw in the last class. So no change in the loan, no change in the capital, no change in the cash, no change in the stock, no change in plant. Now we are saying depreciation. For the time being I'm defining depreciation, okay, depreciation as allocation of cost. Later on we'll see what is that allocation. So over a period of time, the plant will reduce by 4 every year. So therefore, the plant will reduce by 4. How the 4 is calculated, that's a different discussion. No change in the cash because it's only an accounting adjustment. No change in the loan, but the profit will reduce by 4 because depreciation is an expense. No change in this. Okay, so that means whenever depreciation is shown, the asset, plant or any other corresponding asset will reduce and profit will reduce. That is the effect of that. So profit will reduce and the plant will reduce. So therefore, depreciation, though there is no separate item here, you can observe that there is a reduction in the plant and there is a reduction in the profit to the extent of, okay, to the extent of the depreciation, to the extent of the depreciation. So reduction in the plant and reduction in the profit. There are several questions on depreciation can be raised. How is calculated, why it is calculated, what is an effect of depreciation on the cash flows, which we'll discuss a bit later on. But for the time being, the objective was to show what happens to the depreciation on the accounting equation. Now first time I want you to see something interesting. I'm saying take this accounting equation here and you put that in a different order or a different manner. You see a statement, not an equation. And that statement, which we'll pick up as we move along, is actually called the balance sheet. In other words, so balance sheet is accounting equation on a particular date. So this is the total which is shown here. So this is the total which is shown on the asset. So balance sheet at a particular point of time is the accounting equation at that particular date or on that particular at the end of the year or the end of the month or at the end of the day. So balance sheet is a reflection of or shows the accounting equation. So once again, the objective of this session was to show depreciation. In the same manner, let me pick up one more item, that is dividend. Okay, so I've just put one more item. All other transactions are same. So let me copy these items because there is no point in doing it again. So I just copy that and put it here. Okay, put it here. I should need a space. Hope I'm not wrong. Okay, so in that case, let me see depreciation. So 59, yes. Okay, so let us create one more space here. Okay, so that will be better. And let me remove these items once again because I need okay, so let me copy that. So depreciation, so all these items are in same, so I copy these items here. Okay, so that is so as of now we have profits. You can see that we have profit of 59. So we have profit of 59. Now what to do with this profit? That's the question. The profit which is there, profit can be distributed. Profit can be distributed as a dividend or can be retained or can be retained by the business. For the time being, we want to see distribution. So when I have profits of 59, I'm distributing 25. That means my cash will come down by 25. No change in the stock, no change in the plant, no change in the capital, no change in the loan, but the retained profit is reducing by 25 and no change in the outstanding salary. So the dividend is a distribution of profit. So dividend reduces the profit and dividend it is paid, so there is a cash reduction. And if you are in the same way, you can see that the what you call your accounting equation in the form of balance sheet also looks same. So that means depreciation reduces the plant and reduces the profit. Dividend reduces profit and reduction in the cash. But all these items will look much better if you see the financial statement. The objective of this session was to explain the effect of depreciation on the accounting equation, effect of dividend on the accounting equation, because they're not directly visible on the accounting equation. You have to see the profits or you have to see the cash to that effect. Thank you very much.